In the continuation of the above two videos, now we are going to see what is the meaning of audit and what are the objectives of auditing. The meaning of audit. Audit simply refers to the evaluation of business, books of accounts and vouchers. It doesn't it is done to make sure whether all the financial transactions are accurately recorded. Auditing aims at finding out the errors from books of accounts of the business. It aims at the prevention of frauds. This examination is totally unbiased and conducted by an independent person. The person doing auditing should be qualified for the job to perform with its accuracy. Objectives of auditing accounts and statement of verification. Evaluating the fairness and the accuracy of the books of accounts. Evaluating the fairness and accuracy of books of accounts is the primary objective of auditing. It checks each and every financial transaction thoroughly. It detects and prevents any frauds in the book of accounts. The auditor is provided with free hands to audit the book of accounts and is independent of business. Checking accounting policies. Every business or organization needs to follow some accounting policies. Book of accounts are prepared according to these accounting policies. If business has an effective accounting system, its efficiency can be increased. It is the duty of the auditor to check the accounting policy of business and express his independent opinion. Error and fraud detection. Auditing helps in easy finding of errors and fraud from the book of accounts. It is the duty of a management to avoid and check errors and frauds. However, sometimes it becomes difficult for the management to find out the errors. It is through auditing that helps managers to find out errors and frauds. After this, managers take corrective steps against the errors or frauds. Improves the quality of business process. Auditing helps the management in finding out the errors and frauds. Management can take corrective measures against these errors. Steps are taken so that they are not repeated again. This way it is improve the quality of business process and improves its efficiency. Also, the employees of business work properly due to the threat of auditing. Assurance to investors. The main objective is the assurance to the investors. Auditing assures that each and every figure represented in the financial statement is correct. It helps in evaluating every single figure of business books of accounts. Financial statement after being audited are considered trustworthy by investors. Investors are fully assured by these financial statements. Checking assets and liabilities. Audit thoroughly evaluates the financial statements of the business. It helps in confirming the true value of assets and liability of the organization. It helps in determining true financial position of the business. After that, accordingly, the proper plans can be made to achieve the target and goals. These are some of the importance of objectives of auditing. Next comes the appointment of an company auditor. Various modes and regular legal requirements are there. The modes can be appointed by shareholders at the annual general meeting, by the board of directors, or by the court of the situation. Legal requirements. The appointment process is governed by the corporate laws and regulations requiring specific procedure, disclosure, and terms of engagement for an auditor, independence and transparency. Qualification and disqualification of an auditor. Auditor must possess the necessary education and experience. If it is not there, he will be specific factors can be disqualified individually from serving as auditor, include conflicts of interest, criminal convictions, or lack of independence from the audit entry.